Want to grow your money? Investing is the key. Saving is important, but it won't make you rich. Investing helps your money grow faster. Imagine a tree. Saving is like planting a seed. Investing is like watering and fertilizing it. Let's explore the exciting world of investing and how to get started. Cash is king, right? Important for emergencies and short-term goals. Keeping too much cash idle means it loses value due to inflation. Think of cash as a comfortable chair, great for relaxing, not for a long journey. We need investments that beat inflation and grow our wealth over time. Bonds are like loans to governments or companies. They pay you interest. Bonds are generally safer than stocks but offer lower returns. Think of bonds as a reliable car. Gets you from A to B, but don't expect a thrilling ride. Bonds provide stability and income, especially for cautious investors. Mutual funds pool money from many investors to buy a basket of stocks or bonds. Diversification reduces risk. If one investment does poorly, others can cushion the fall. Imagine a buffet. Mutual funds let you taste different dishes instead of just one. They're managed by professionals, making them suitable for beginners. Section 5. Stocks, owning a piece of the pie. When you think about owning stocks, imagine it as owning a piece of a delicious pie. Each slice represents a portion of the whole pie, just like each stock represents a share of a company. Stocks represent ownership in a company. When you buy a stock, you are essentially buying a small piece of that company. This means you have a claim on part of the company's assets and earnings. The more stocks you own, the larger your share of the company. You participate in their success or, their failure. If the company does well, the value of your stocks can increase, leading to potential profits. Conversely, if the company performs poorly, the value of your stocks can decrease, resulting in losses. It's a dynamic and sometimes unpredictable journey. Stocks offer the potential for high returns, but also come with higher risks. The stock market can be volatile, with prices fluctuating based on various factors such as economic conditions, market trends, and company performance. This volatility can lead to significant gains but also substantial losses. Think of stocks as a racehorse. Just like betting on a horse, investing in stocks requires research, strategy, and sometimes a bit of luck. You need to analyze the company's performance, market conditions, and other factors to make informed decisions. They can be very profitable but require careful selection. Not all stocks are created equal. Some companies have a strong track record of success while others may be more speculative. It's important to diversify your investments to spread out the risk and increase your chances of success. Investing in established companies with a strong track record can mitigate risk. These companies are often more stable and have a history of consistent performance. While they may not offer the same high returns as more speculative stocks, they can provide a safer and more reliable investment option. Remember, owning a piece of the pie means being part of the company's journey, through the highs and the lows. Section 6. Dividends, getting paid to own. Some companies share their profits with shareholders through dividends. Dividends provide passive income, like a bonus for holding onto a stock. Imagine owning a rental property. Dividends are like receiving rent payments. Reinvesting dividends can accelerate your wealth growth through compounding. Section 7. Start small, dream big, your first investment. This is the beginning of your journey towards financial independence and security. Don't be intimidated by investing. It might seem complex and overwhelming at first, but remember, every expert was once a beginner. The key is to start, no matter how small. Start small and gradually increase your contributions. Even a modest amount can grow significantly over time thanks to the power of compound interest. Think of it as planting a seed. Consider low-cost index funds or ETFs that track the market. These options are great for beginners because they offer diversification and lower risk compared to individual stocks. Think of it like building a house. You wouldn't expect to have a fully built home overnight. It takes time, effort, and patience. Each brick represents a small investment. Over time, these bricks come together to form a solid structure. Over time, these small investments will accumulate and grow into something substantial. Just like a garden that flourishes with care and attention, your investments will grow, providing you with financial stability and peace of mind. Section 8. Time. Your greatest ally in investing. The earlier you start investing, the more time your money has to compound. This means that even if you start with a small amount, the power of compounding can turn it into a substantial sum over the years. The key is to start as early as possible and to be consistent with your investments. Compounding is like a snowball effect. Imagine a small snowball at the top of a hill. As it rolls down, it picks up more snow, growing larger and larger. Similarly, your investments can grow exponentially over time as the returns on your investments start generating their own returns. Your earnings generate more earnings over time. This is the essence of compounding. The interest or returns you earn on your initial investment start to earn returns themselves. Over a long period, this can lead to significant growth in your investment portfolio. Think of it like planting a tree. When you plant a sapling, it starts small and takes time to grow. But with the right care and conditions, it can grow into a tall, strong tree. Similarly, your investments need time to grow and flourish. The sooner you plant it, the taller it will grow. The same principle applies to investing. The earlier you start, the more time your investments have to grow. This can make a significant difference in the long run, especially when you consider the power of compounding. Even small amounts invested consistently can lead to significant wealth over decades. It's not about how much you start with, but about being consistent and giving your investments time to grow. Over the years, these small, regular investments can accumulate into a substantial amount thanks to the power of compounding and the passage of time. Section 9. The bottom line. Investing for a brighter future. Investing is crucial for building long-term wealth and achieving financial goals. Diversify your investments, manage risk, and stay committed for the long haul. Remember, investing is a marathon, not a sprint. Patience and discipline are key. Start today and watch your money grow.